I think Bitcoin's going to $200,000 by the end of the year. I think what's happening right now, when you look at the macro condition, it's actually playing into the long-term case for Bitcoin. So it's making me more bullish long-term because there's economic instability. The government is mucking with the economy. All the things Bitcoiners hate makes that long-term price target go up. But it increases the discount factor, which is why the market has pulled back. So as a long-term Bitcoin investor, I see that as a gift.
Hougan remains extremely bullish on Bitcoin's long-term potential. He acknowledges short-term uncertainties. The Federal Reserve's stance on interest rates, ongoing economic instability, and potential recessions all play a role in shaping Bitcoin's price action. If economic conditions worsen, Bitcoin could face downward pressure in the short term. However, these same factors ultimately reinforce Bitcoin's fundamental case as a hedge against instability.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Look, we're at a $2.5 trillion deficit right now. I don't think there's any realistic way to trim that to $1 trillion or less, which is where you have to get to if you start to want to sort of support the dollar long term and make Bitcoin have less space in the world. So it is absolutely true. If we see real austerity and we somehow trim that deficit substantially, that's a headwind to Bitcoin. I just don't believe it. I feel the same about sort of recessionary odds and the idea that we're going to go through a period of austerity. That also would be bad for Bitcoin, to be honest. That's part of the same equation, but I don't buy it. I think the government will blink at the end. So I could be wrong, and if I'm wrong, it's going to be a challenging period for Bitcoin. But I think the government will blink on austerity. I think the government will blink on interest rates. I think ultimately it's going to play into the long-term case of Bitcoin. I think about where I think it's going long-term. Like, let's say I think Bitcoin's going to $200,000 by the end of the year. And then I think about the discount rate back to present value. The discount rate is based on the economic uncertainty in the market. I think what's happening right now, when you look at the macro condition, it's actually playing into the long-term case for Bitcoin. So it's making me more bullish long-term because there's economic instability. The government is mucking with the economy. All the things Bitcoiners hate makes that long-term price target go up. But it increases the discount factor, which is why the market has pulled back. So as a long-term Bitcoin investor, I see that as a gift. If I'm looking at the short term, though, it could get worse before it gets better, right? If the government keeps sort of pushing the risk curve down and we start heading towards recession, that's probably not good for Bitcoin in the short term. So long-term, extremely bullish. Short-term, some trepidation. And we'll have to see what comes out of Powell's voice, what comes out of other people's talks in the weeks to come. If you look at the history of Bitcoin, it just needs somewhere to be in a positive orientation to get that market really moving ahead. And like you said, I think when we look overseas, you already see that happening, and I think it'll happen in the US. So I think it responds to that global phenomenon. I'm much more bullish on Bitcoin than I am on the US stock market in the short term. It is a global asset, so it will be supported around the world. Crypto native degen world is in existential depression, and all of the institutional players coming into the market are like, this has never been better.
Yeah.
Right? We are on the cusp of a multi-year bull market, the scale of which you haven't even imagined. I think that's absolutely true, right? Look, I think the meme coins will always exist. I also think they were great stress tests of this infrastructure that we've built, and they showed it can handle real throughput. But, from an institutional perspective, when I look at, what's happening on stablecoins, on tokenization, on institutional investment, those are all up and to the right. And I think that thesis is the right thesis right now. And the sort of crypto native world will come back to that in the future. I think there are two things that are going on, and they're going to have big impacts. The first is, I think you're absolutely right. A lot of the money that's going to come in is just going to be Bitcoin, or it's going to be index, like top 10, and it's just going to allocate a little bit over time. And I suspect that will mean that those assets will have lower volatility, lower pullbacks, a persistent bid, a persistent slope upwards, and that'll probably separate from assets beyond beyond Bitcoin, maybe beyond the top like 5 or 10 assets, right? And there'll be a long tail that just trades very different, much higher vol. So I think that's very true. The other thing that I think is happening, which I think the world maybe doesn't reflect, is if you think about any crypto asset, there's sort of two pieces of its value. There's its utility value and its speculative value, right? Bitcoin has utility as a store of value, and then we speculate it will be more useful in the future. In previous cycles, crypto was mostly speculation, right? The utility value, even of something like ETH or Solana, was relatively low. This cycle is more, the utility is more established. And that just means that we're going to have assets trade in different ways, like different correlations. I think the correlation between Bitcoin and Ethereum will be lower, substantially lower in the future than it has been in the past, because they're very different things. One is digital gold. One is like a new internet, right? Why should they be correlated? And so I think because these different types of investors, and also because we're in this utility phase, you're going to see much more dispersion, lower correlations, and we're not going to have the same cycles that we had in the past where you did sort of move down that risk curve.
Hougan draws a compelling parallel between Bitcoin and gold. Gold's rising valuation signals that the global appetite for non-fiat stores of value is at an all-time high. If Bitcoin were to match gold's market capitalization, its price would exceed $1.1 million per coin, significantly higher than previous estimates. This expanding total addressable market reinforces Bitcoin's long-term potential. However, in the short term, Bitcoin is still treated as a risk asset, which leads to volatility. Hougan views gold's performance as a leading indicator for Bitcoin's future, suggesting that once macroeconomic risk factors stabilize, Bitcoin will catch up to gold's trajectory.
Where are you going to find $1 trillion of new demand for U.S. short-term debt? The best single answer is stablecoins. Other countries are pulling back on their purchases of U.S. debt. I don't think the U.S. consumer is ready to step in and fill that gap. You need something to, and lo and behold, we have this stablecoin boom that's already starting, and I think it's going to accelerate tremendously. What that means is stablecoin legislation is a lock, right? Democrats want it, the executive branch wants it, Republicans want it. It is that fundamental source. I think it'll be interesting to see, how wide, how much duration do they allow into these stablecoin assets? What does that look like? But yeah, it's a multi-trillion-dollar sink for U.S. debt over the next few years, and there ain't that many of those around. So I think the U.S. is going to seize that and really lean into it. I think there is that argument in the same way that like having gold reserves sort of helps ensure that there's the strength of this of the U.S. dollar. But I don't think that's the core basis for why the U.S. dollar is the world's reserve currency. So I think it's helpful. I mostly see it as this hedge, or as this way of sort of pushing Bitcoin to be the secondary solution beyond the dollar. Right? It's a way better world for the U.S. if the dollar is the reserve currency and the alternative option is apolitical than if the dollar is the world's reserve currency and the alternative option is the ruble or the yuan. Right? Those are bad worlds. So you could close your eyes and shut your ears and stuff and pretend that there won't be an alternative, but that's foolish. I actually like the idea that we're sort of leading down the path toward maybe there will be an alternative, but let's make it apolitical rather than from one of our adversaries. I think that's a better path. There are two things you have to think about when you think about the value of an asset. There's its long-term price target and there's its discount factor. What gold is telling you is that the long-term value of non-fiat stores of value is higher than it's ever been before, right? Just to make that concrete, a few years ago, if Bitcoin matched gold, Bitcoin would get to 800,000. Now it will get to 1.1 million, right? So Bitcoin is growing that TAM. It's just we're suffering because we have this risk asset element. But to me, what gold is telling me is that Bitcoin is going to follow that its addressable market has never been bigger, that its opportunity has never been bigger. And we're just going to catch up to that once the market normalizes from a risk perspective. So I see it as a leading indicator of where we're going. So you still have Elizabeth Warren and others who are strongly anti-stablecoins for reasons I don't understand. For what it's worth, I think stablecoins are a strongly progressive tool that can lower costs and increase access to banking and lots of sort of core progressive goals. So I really don't understand that. But I think the dominant majority already supports stablecoins because they see the need for U.S. debt purchases. They see the ability to export dollar demand around the world, to increase dollar's place as a reserve asset. That was on the outs, right? That is naturally fading over time. This is like a booster shot that may extend that duration for a long period of time. So it's such a massive win for America that I think you are starting to see pretty mainstream adoption on both sides of the aisle. I think it'll sail through both houses of Congress. Always kick it. It's the easy button, and no one likes, politicians don't want to be unpopular. They can only be so unpopular for so long. You're already seeing them kick that can in Germany. You're already seeing them start to kick the can in China. I don't think the U.S. is going to be the only one that tries to hold the line. We've seen other individual nations try to enact austerity against a world that's easing, and that's just a very uncomfortable position. So I think once they start hitting the easy button in 2008, I don't think they can stop. So I think they're going to blink eventually. Here's the amazing thing. You know, people used to ask me, what are you worried about in Bitcoin specifically? And most of the objections, they were easy to deflect. Environment, easy to deflect. Criminal use, easy to deflect. Valuation, easy to deflect. The one that wasn't easy to deflect was, will the government ban it, right? Because from a certain perspective, it's a challenge to fiat currencies. And why would the government allow that to emerge and evolve? The absolutely incredible thing about the last 6 months is we've solved that risk. We've somehow co-opted governments. We've started this game theory where they need to have exposure to this asset that's emerging as a geopolitically important asset. And once they do that, they are not going to ban it. So it you know, people say, why would the government do this? They're sort of sowing the seeds of their own demise. But of course, the answer to that is they have no alternative, right? They understand. Cliff Asness from AQR wrote this incredible piece anti the Bitcoin strategic reserve. And he said it would be as if the US government built a Chinese yuan strategic reserve. But of course, that's exactly the point. No, it's not that. It's the idea that there may be something other than the dollar. If we don't make it Bitcoin, it's going to be another nation's currency that fills that role. And so I think the US government realizes that an apolitical option is better than an arch enemy's political option. And so I think that's where it fits in. But it's absolutely incredible. For a Bitcoin investor, it dramatically removes the biggest risk in Bitcoin and makes it much more attractive. I've said this before. I think it's the single best time in history to buy Bitcoin from a risk-adjusted perspective because we've removed that risk. It's really an incredible development.
Historically, the biggest existential threat to Bitcoin has been potential government bans. Many skeptics questioned whether governments would allow an asset that challenges fiat currencies to thrive. However, the past 6 months have dramatically reduced this risk. Instead of banning Bitcoin, governments and institutions are integrating it into their financial strategies. Hougan describes this shift as a game theory moment, where governments recognize that ignoring Bitcoin could allow rival nations to gain an advantage. By co-opting Bitcoin into their financial systems, they ensure that the alternative to fiat remains apolitical rather than adversarial. This shift dramatically improves Bitcoin's risk-adjusted investment profile, making it one of the best times in history to invest in Bitcoin. Please like and subscribe.